You know, in the world of finance, you hear bold predictions all the time. It's part of the game. But every once in a while, a thesis comes along that is just so big, so dramatic, it is impossible to ignore. Today, we're going to dive into the case for what some analysts are calling a historic, once-in-a-generation moonshot for silver.
The biggest, most bullish cup and handle in living memory. Now that is not just some optimistic fluff, that is a massive claim. It's a claim that a technical pattern, one that has been decades in the making, is about to trigger an absolutely explosive move. And that right there, that is the multi-billion-dollar question, isn't it? Because a pattern is just a pretty picture on a chart until you understand the real-world forces bringing it to life. So let's break this down. We're going to look at the chart, the global economic stage, and the high-stakes psychology that could make or break this entire thing. So where do we even begin with a story this big? Well, we start with the foundation of the entire argument, the chart. And we're not talking about a few months of data here. We have to zoom out, way out, to a pattern that's been taking shape for over 40 years. So what exactly is this cup and handle? The best way to think about it is like a giant coiled spring. The cup is this long, slow process of building up tension, sometimes over decades. The handle is that final brief consolidation right before the tension gets released. And when the price breaks above that handle, well, the spring is let go, potentially launching the price straight up. And the scale we're talking about here is it's staggering. We are talking about a 31-year cup followed by an 11-year handle. I mean, just think about that for a second. A pattern that started forming before a lot of today's traders were even born. And the whole thesis is that we are right here, right now, at that critical breakout point. But look, a pattern this huge, it doesn't just happen in a vacuum. Proponents of this theory argue that it's a reflection of these massive shifts happening on the global stage. This is the macroeconomic fuel that could turn a technical spark into a raging inferno. And what they see is basically a perfect storm brewing. On one side, you've got this growing distrust in traditional money, right? Central banks are ditching US dollars for gold, and all this political uncertainty is threatening more inflation. And then, on the other side, you've got this surge in demand. Huge institutions are piling into precious metals, and governments are finally waking up to how critical silver is as a strategic commodity. Just look at this chart. For the first time in 30 years, the world's central banks hold more gold than US treasuries. That is a seismic shift in global finance, my friends. It is a massive vote of no confidence in the old system. And historically, when gold makes a big move, silver tends to follow. And often, it moves like gold on steroids. And then there's this number, 89. That's how many ounces of silver it currently takes to buy 1 single ounce of gold. The historical average? It's way down, closer to 45. To the bulls, this number is just screaming one thing. Silver is dramatically, historically undervalued compared to gold, and that huge gap is bound to snap shut. Okay, so we have the long-term pattern and we have the macro fuel. But there's a third element that could act as a massive accelerant, a really dramatic market event that proponents claim is happening as we speak, a giant short squeeze. So for anyone not familiar, a short squeeze is a truly brutal market event. It happens when traders who bet on a price drop, the short sellers, get caught on the absolute wrong side of a rally. To cut their losses, they are forced to buy back the very thing they bet against, which only adds more buying pressure and sends the price rocketing even higher. It's a really vicious cycle. So here's the story some analysts are telling. For years, a group of large banks have allegedly been suppressing the price of silver with these huge bets against it. Step 1, suppression. But this time, it failed. The selling just didn't work. The price refused to drop. Step 3, the trap was sprung. And now, those same banks are caught, and their only way out is to buy, potentially becoming the very fuel for the rocket they tried so hard to keep on the ground. In other words, this isn't just a rally. The theory is that the market's biggest sellers have now been forced to become desperate buyers, creating this insane feedback loop with no clear ceiling in sight. So, with this potentially historic move kicking off, you'd think the path to making money would be easy, right? But the sources we looked at argue that for a lot of people, navigating a massive bull market can actually be even harder than navigating a downturn. See, here's the problem. It's our own conditioning. Most of the time, markets just kind of churn sideways. They go up, they go down. And in that environment, the winning strategy is to scalp quick profits. But in a powerful trending market, that same instinct becomes your absolute worst enemy.
It pretty much guarantees you'll sell at the very beginning of a huge move and miss out on those life-changing gains.
And this is where our own minds start to work against us. We are hardwired to take profits too early. We have this impulsive need to always be doing something. We get terrified of small dips and we sell, only to watch in total agony as the price rips higher without us. The hard truth is that massive rallies are built on just a handful of explosive blue days. And if your fear keeps you on the sidelines for those few days, well, you've missed everything.
So this brings us to the final, and maybe the most important takeaway from all of this, the absolute necessity to adapt your entire mindset.
So the ultimate lesson here, it isn't about being some kind of genius who can predict the future. It's about having the clarity to recognize when the rules of the game have fundamentally changed, and then having the discipline to shift from being a hyperactive trader to a patient holder. It's about fighting every single instinct you have that's screaming at you to sell early.
And this quote just says it all. The volatility, the gut-wrenching down days, that isn't a sign that something is wrong. That is the price of admission. It's what you have to endure to make sure you have a seat at the table for those few explosive blue days that create all the wealth.
Which leaves us with one final, and I think really challenging thought. In a market that is constantly screaming for action, what if the most powerful move, the most profitable skill of all, is having the discipline to simply sit still? That question, that's the real heart of this entire thesis.